Boeing is once again in the news. This time their 737s have issues. The stock is not down that much, 7.33%. But let's see if this is maybe a buying opportunity. First of all, Boeing makes money in 3 segments. The commercial segment, which is them selling planes. The revenue is here growing again, but the operating margin is still in the negative. They say this will be fixed once they sold the inventory of 787s and 737s. Well, fun fact, all the planes are grounded currently, 737. Even if it turns out that those planes are safe to fly, will you buy those 737s? Maybe the customers who are gonna be like, oh, this is gonna be a 737 flight, I don't wanna take it. Are you gonna buy that plane or a competitor's plane? So I think here they're gonna have huge margin issues for now. They have defense. Yes, Boeing of course also makes defense products. It's a pretty big size of a revenue, 5.5 billion. But here, they also have negative operating margins. They didn't even explain that much in the investor call, how they're gonna fix these margins. And then they have global services, their jewel. It's them offering a lot of services, mainly servicing existing planes, shipping out parts of them, repairing them. And of course, this is very profitable. And here, that is the only business where they have a good margin. And this is where basically all of our cash flow comes from right now. Now, when we look at the revenue, it has still not recovered to 2018 levels. The airplane industry is back into growth mode. For example, United is back to all-time high revenues. Same as Southwest as an example. Of course, that does not mean Boeing should have more revenue. They don't make money when an airplane ticket gets sold, they make money when an airplane gets sold. But if you think about it, the airline industry is doing okay. They should be ordering new planes again, and the fact that Boeing is still not profitable is a huge risk here. Free cash flow is kinda back, but it is extremely unstable. If I show you the quarterly view, you can see it is an up and down. They're going into the negative quite often, and they're using all the free cash flow they can get to pay down debt. You can see when they didn't have a good quarter, that gets increased, but usually afterwards they have positive free cash flow and they pay it down again. So they're working on really reducing this. They have paid down a lot of debt, credit to them where credit is due. But at the same time, currently they're diluting you by around 1 to 2% per year. It is not a crazy dilution as you can see, but it is still a dilution. What I don't understand for is the share-based compensation. Since 2020, you know, the year where Boeing had all the issues, no new planes being ordered, issues with their existing planes, share-based compensation has tripled. And it has not gone down. So the management has basically been saying, pat on the shoulder for us, we're doing an amazing job at this company, debt is up, share count is up, especially when the company is doing terrible like now. The stock-based compensation shouldn't 3x. It shouldn't even have increased. They cancelled the buybacks, they cancelled the dividends, but said, hey, the executives, we deserve 3 times more money. And with margins being this volatile, I do not see why management deserves to be paid out so much. They're hitting a 6.4% gross margin right now. Before the issues arise, they were at 22%. And here we have one of the issues in the airline industry. Warren Buffett himself said that the airline industry is one of the worst to invest in. Well, with Boeing, you have some other issues. If other companies are in crisis who buy you planes, there goes all of your revenue, but your operating expenses stay the same. The factory can't just shut down completely. But even with that, I don't think management is doing cost control as good as they could. Yes, they're slowly bringing down interest expense, but it's not magical to bring down debt when you basically cancel all buybacks, cancel the dividend, and the management is acknowledging that stuff is going bad. They're admitting that their margins which they targeted were not met. This performance is below expectations, and we acknowledge that we aren't as far along in this recovery as we expected to be at this stage. They say that, but at the same time, 3 times stock-based compensation for management. We're doing everything perfectly. Boeing before was a growth machine. They were growing free cash flow per share enormously. But right now, I just don't see how they're gonna continue doing that. It's very hard to value a company like this for me. I don't know when they're gonna get their margins back. Management doesn't know when the margins are gonna be back. But at the same time, the stock is not trading that low. Sure, there was a huge surge in the stock in 2018 to 2020. But in relative to its normal price history, the stock is fairly expensive right now. And when I'm looking, they say they have to clear their inventory. $78 billion is inventory right now. That is more than half of total assets. So if they have to discount that by a lot, there goes the entire shareholders' equity, and the company is hugely leveraged. So I'm gonna try to value the stock. Let's say they get back to cash flow levels of 2016. If we go off that they would go back to around 2016 levels of free cash flow. That would be around 13.3 free cash flow per share. So let's say for the next 5 years they're gonna grow at 4%. That is just free cash flow growth. After that they're gonna start back the buybacks, buy back 2% of a company each year, 6% growth, 10% discount rate, 15 multiple, but after those 5 years, they're also gonna pay out a dividend, 40% of free cash flow with a little deduction due to taxes. It would come to a value of $134 a share. 42% from where it is today. Well, what if it goes better? Maybe better margins, maybe better revenue growth. 18 multiple, $186 a share. What if it goes bad? Their margins continue to be repressed. Tiny amount of free cash flow growth, some buybacks with money they have left over. 13 multiple because it's just a not fast growing company with a lot of debt. $96 a share. Now this is the part I wouldn't want to invest in the stock. The management doesn't know where it goes. No one knows where the margins are gonna be. Their inventories have huge issues. So I just don't think I want to invest in this company. I like to invest in companies where maybe they're a bit in a crisis, but I know where it's gonna go. Or rather, I've at least an idea where it's gonna go. But here, I don't know where it's gonna go. Maybe in the future, when it has recovered, I'm willing to wait for that. I don't need to buy it. What do you think about Boeing? Write it down below. Have a good day.